We have lots lined up. Alex, couple of stories that we're tracking this morning.
Absolutely. Three very interesting headlines, which we will seek to delve deeper into on the editor's cut. If you're watching this program for the first time, this is where we go beyond the headline and give you, hopefully, actionable insight that you can take into trade. The first and the most important question, I think, and this is a question, guys, that a lot of people are asking, is the Indian market overvalued? You saw foreign institutional investors sell for the first time yesterday in a while, 33 crore. That's a small number in the cash market, but is that indicative of more selling to come? How does India stack up to global peers? That's the question. The second point that we're talking about is the advanced tax numbers. And what does that indicate for the third quarter? Generally, that gives you a bit of a lead indicator as to what to expect on the profit numbers for India Inc. And finally, we'll talk about a headline that you already know about, which is the fact that Warburg Pincus, or an entity that is associated with that company, is going to be selling 3% stake in Apollo Tyres. Why now, at a time when the company is actually doing quite well in FY24? Let's start with the first question, Hiral, which is, how does India stack up? 10% gain, I must point out, over the last month, 10% gain for the Nifty 50 approximately.
So if you see in terms of overall, if you have to compare India to emerging markets or even developed markets, Alex, clearly your current price to earnings, or if you take the 1 year forward as well, it's clearly telling you that India is expensive as compared to all of these markets. If you see the numbers that will come in on your screens as well, in terms of the performance, it's clearly indicating this. Now, the same numbers when we worked out back then in September, India was the fourth most expensive market, and now it's become the most. There you go. If you see the current P, which is at around almost 25 times. Similarly, if you see in terms of Sensex Bank Nifty as well, pretty much on similar lines as well. Let's compare this now in terms of the other markets from the emerging markets and the developed markets. If you see in terms of Hang Seng and Kospi, it's interesting to see how Hang Seng is just at 9.16 times, and that's the current, and 12-month, it's 8.47. So this is clearly giving you an indication where India is at in terms of the price to earnings multiple. Let's just quickly look at the US as well as the European markets as well. CAC and DAX, both of these, I mean, these are still smaller emerging markets, so you can't really compare directly, but this is just to give perspective in terms of where we look at. DAX and CAC, if you see in terms of developed markets as well, you have India, which is expensive from a current P perspective.
Nearly twice that
as
mark,
well,
yeah.
Exactly, it's twice. And if you see in terms of the US markets, now what's interesting in the US markets, Alex, is the way NASDAQ has moved, right? If you see the YTD performance, NASDAQ is up 42%.
Yes.
And I don't think so anyone is up beyond that 22% mark. So NASDAQ is clearly, literally, I mean, given returns which are way above what India or any of the other markets have given. So performance-wise, we're still not there. But from a valuation perspective, we become the most expensive now.
So 17.7% is the mark that the Nifty hit as of yesterday for 2023. So what you're seeing is absolutely on the dot, which is the Nasdaq is up 40% or over 40%. But the question is, can any other market around the world compare with that one group of stocks that has really been on a tear?
No, but Nifty as a whole, if you look at a long-term average, it's trading at 18.5 times forward earnings, which is in line with the 5-year average of Nifty, which is there. So it's so while Hiral is talking about, it's relatively overvalued, but the growth momentum is something which is of company, and the earnings is something which will determine the kind of valuation that a market will get.
So I guess to a certain extent, beauty is in the eye of the beholder. And do you anticipate that the potential justifies the valuations currently? Are you a buyer? You need to make
to this, I think, as Sajeet is talking about the growth numbers as well, his next line of conversation becomes absolutely relevant to this.
Which is what I was coming to. Which is what I was coming to, which is that the advanced tax numbers are generally a lead indicator of the performance of India Inc. And it's quite a positive number. Take us through those numbers.
You know, there are two ways to look at the India growth in corporate India. On the top line, you see the GST numbers that gives you an indication of how the top line of the company is moving, and on the bottom line, you need to look at the advanced tax numbers. The numbers for the December quarter came in, and if you look at the 9-month period, which basically means that companies have to pay up to 75% of the total tax outgo by December 15th, they're growing at 21%. Which basically means that the profitability or PBT level, India Inc.'s PBT profit before tax is growing at 21%. If you break it down into quarterly growth, then you see in the first quarter we started off with a slow growth of 17.7%. In the second we went to 25%. In the third quarter, which is December end, as of the last data available, is 19.6%. So it basically means that you are looking at a good double-digit growth, but it also gives you an indication that there are some kind of pressure points coming in on the PBT level with respect to rising in some of the input costs which is going on, or raw material prices which are again inching up in some of the sectors. So that is showing up here in the third quarter numbers.
But can there be a direct correlation, Sajeet, in the advanced tax numbers and the PBT level? The reason I'm asking is that in years past, you've seen companies front load their tax for the year, and so therefore they don't have a very big number in the fourth quarter. So can it be a direct correlation?
It is a direct correlation because what you are supposed to do is just project your profitability for the year and then pay 75% by the end of December. Now, there is a caveat here. We are a little myopic in looking at the Nifty 50 earnings or a Nifty 500 earnings. We are talking about entire economy here because the corporate tax collection is for the entire economy of all the companies who pay corporate tax here. So that tax collection is growing at a very healthy level of nearly 20%. So that is an important takeaway that there is a good growth momentum with respect to earnings growth is coming in.
Okay. And with this, one more thing I want to add is that if you see the overall advanced tax numbers as well, they're clearly exceeding your FY24 budget target as well. And to add to that, from a GDP perspective, we just saw a revision from a 6.5% to 7%. So all of this actually stacks up really well to what Sajeet is saying in terms of that, yes, the profitability could be better. And this, in turn, will also reflect on your fiscal deficit.
Certainly.
Yeah. So there are.
I mean, the mismatch there is the divestment number, which Janani has pointed out in Delhi, and that's a very significant miss. To a certain extent,
so
this
there are certain things which will come in, like your Manrega numbers will come in. The food security, which has been extended by another 4-5 years, which has been there. So that's not been calculated as part of the initial budget estimates. So all those are taken on board. But the total revenue collection, which is in terms of tax, direct and indirect tax, is heading to meet or exceed the budget estimates.
So very good numbers, and also for the most important takeaway today, of course, is that yes, India is expensive, and as Sajeet points out, the advanced tax numbers are indicative not just of the profits for the listed entities, but the wider universe as well, and that bodes well for India Inc. as a whole. But the last question has to do with Apollo Tyres. Why now? There have been a few sales by Warburg Pincus. Does this get seen in that context? The reason I ask is because Apollo Tyres, on an earnings trajectory, has been doing incredibly well in FY24.
Yeah, so Warburg Pincus clearly is not waiting for an improvement in profitability as far as Apollo Tyres is concerned. But they're not exactly completely moving out. They're pairing about 3% stake. Their entity, White Iris Investments, holds around 8.04% stake overall in the company. And they're selling somewhere near the current market price at around 440 rupees per share. That's the floor price at the moment. I wouldn't want to hazard a guess as to why they're selling out, because one, they're not completely moving out of the company. Secondly, Alex, as you mentioned, that they are in fact looking at good growth in terms of their profitability. Are they keeping up to the peers? It's a mixed one, because while you have JK Tyres, which has seen staggering, stellar numbers through the course of the last few years, Balkrishna Industries, on the other hand, has done terribly. Apollo Tyres is somewhere in the middle, But where do they stack up when it comes to valuations? They're the cheapest at the moment, coming in at around 26 times. The most expensive, of course, is MRF, but MRF has a largely institutional holding because of the fact that it is such a largely priced stock, even per share. Yeah. Besides that, we have, of course, TVS, Sri Chakra, and the likes. But Apollo Tyres is currently the cheapest. So one may want to think about why is it that they want to move out at this point in time, even partially. So that's a question that needs to be answered. And in terms of how the stock is done on a year-to-date basis, well, it's not done tremendously well. It's moved up around 38% as against JK Tyres, which has doubled. As against something like even a Seat, where the growth has not been as staggering as Apollo Tyres, but that has also moved up around 49%. Balkrishna Industries has just moved up around 18%, but that is again on expected lines because they've really not done well in the markets abroad. They get a lot of their revenues from abroad. So the question really is that as to why they're booking out at the moment. It may not necessarily have to do with Apollo Tyres, but perhaps Warburg Pincus and their portfolio
strategy.
overall.
Yeah,
Yes.
But if you look at when Warburg entered, I think they entered into an agreement in 2020 and finally they got the shares in 2021. It was through CCPS. So the conversion price was around 171.5. So if they're exiting at 400 plus, they already doubled their investment. And they're booking some of the profits. So as Agam said, they're only selling around 3%. They hold around 8% in the company. So it's just some kind of profit booking that they're doing for their portfolio. Simple
And then to add to this as well, if you see in terms of the tyre space, what's happening is you've seen JK as well as Seat, which are moving on the premiumization strategy currently, right? So that's the shift that they are taking. And to add to that premiumization, the two-wheeler space is what they're concentrating on. We heard about Triumph, we heard about Royal Enfield. We heard
Hero
about
Motocorp.
Exactly. So all of them, with their premium launches, it's mainly JK and Seat which have entered that segment. Apollo is stronger in the passenger vehicle segment as compared to two-wheelers, right? So from a strategy perspective, from a growth perspective, everyone's still betting on from the two-wheeler space, if you have to look at tire ancillaries, and you still have Apollo, which is slightly lagging behind from a business perspective.
We'll have to see how the stock action is in just a short while. And in fact, those were the three big headlines that we talked about this morning on the Editor's Cut. Let us know what you think about them.